Hey, Bulls and Bears YouTube family. It is Wednesday, January 26th, 2022. Another pretty big red day in the markets. Most major indices in the red, even with the Fed holding steady on rates. So we're going to talk about that and more. But first, the biggest story here is the chip shortage has reached crisis levels, and there's not much immediate resolve to this. There's some long-term things that we're going to look at here, but expect car prices to continue to rise, inflation all over the place basically. But let's start with the story right here. The semiconductor shortage has reached crisis levels, and that's per the Commerce Secretary. Well, you don't have to believe the Commerce Secretary. Just look at the cost of car prices, both new and used. Now, the slowdown of manufacturing of new cars, well, that bleeds over into the used car market because the less new cars that are available, the more people are looking for used cars. And the higher prices go because of the shortage of new cars. Well, the higher prices go for used cars because that increases the demand. But let's take a look at this right here. U.S. Commerce Secretary Gina Raimondo says it's high time for lawmakers to pass legislation that helps end a crippling pandemic-fueled semiconductor shortage that's been going on for more than a year. It's a, quote, crisis is what she says. Of course, we all know that. Especially if you're looking for an affordable car, it's a crisis for a lot of people right now. And it's one of the many reasons why debt is skyrocketing, including automobile loan debt. Now, let's think about this in a big picture type of way. A lot of people out there are blaming one party or the other party. There's actually some people out there that say we need to go back to the previous president, but he was a big part of the problem. He might have been the biggest part of the problem. You know, I'm not trying to divide people here. I'm not left or right, but the manufacturing situation was not resolved under the previous president. Otherwise, we wouldn't see the shortages that we're seeing right now. So to just sit here and blame the current administration, and believe me, I'm not a fan of either one of these, left, right, righty-tighty, lefty-loosey. I'm not a fan of either one. But to say that the previous administration had all the solutions, no, this crisis started under the previous administration. I blame the previous administration actually for most of what's happening. If they would have taken the health crisis more seriously at the beginning, then a lot of what we're seeing now would not have happened. All right, and I know I'll probably get a bunch of backlash down in comments because a lot of people just don't understand what's going on. But just ask yourself this question. If the previous administration was so good, the 45 regime, why are we still seeing manufacturing shortages? Why didn't we open up a bunch of factories here in the U.S.? Why do we have to have some new legislation to get the chip shortage resolved? All right, we're going to talk about that legislation here in just a minute, but I want to try to awaken you people to what's really happening here. Left, right, it doesn't matter. Also, low interest rates, the debt-fueled bubble. The current chairman of the Fed was appointed under the 45 regime. Jerome Powell, your buddy and my buddy Jerome Powell, was appointed under the previous regime. So there you go. As far as you think that's going to fix the problem, you've got a lot of other things to worry about besides getting some other, cuckoo in office. I was going to say a different word. I'll just say the word cuckoo for now. Creators on this platform, we have to be very careful about the words that we say, unfortunately. But let's take a look here further into this article. And some of this is already well known. Other parts of this not so well known. The median inventory of semiconductor products has fallen from 40 days prior to the health crisis down to 5 days at the end of 2021. The biggest players of chips, including Intel, is now waiting for the U.S. government to do its part and pass a multi-billion-dollar Chips for America Act. And that's supposed to bring manufacturing back here to the U.S. And that's meant to incentivize U.S. manufacturing of semiconductors. So again, I ask you, if the previous regime was so great, why are we still having manufacturing shortages, chip shortages, etc.? Why didn't all of the other shortages improve under the previous regime? Well, that's because they're not looking out for the working person. They're not working out for the middle class. We saw the top 10% wealth explode during the previous 4 years, during the previous regime. It's continuing to get worse. But to say that the previous regime had all the solutions, absolutely not. It's ridiculous to even suggest that. Now let's talk about the Fed. Today's meeting, rates steady. They're still projecting a rate hike in March. Let's talk about this. Ask yourself this. Inflation is here now, today, right now. Why are we talking about a couple months from now raising rates? Because the Fed, I think they know that they're going to crash the markets. It's either inflation or crash the markets. And here's something that I don't think you're going to hear hardly anywhere else. When the markets do come down, there's going to be something to blame. It's not going to be the Fed raising rates. Let me put it that way. There's going to be something to point at. The finger's going to be pointed at something, and the Fed's not going to take the blame. So I think something's going to happen to kind of pull the plug on this. And I think you better be very, very careful about what you have digitally, because you could try to look at it and it might be all gone, or it might be dark. That's why I've been saying here for years, have some assets out of the system, including cash. People will still accept cash at the beginning of the crisis, whenever the crisis happens. If you ask me, the crisis is already here. But I'm talking about the next leg of the crisis, when you have some severe outages and things like that. Now, consumer debt, the average household debt has gotten so high, it's gotten so bad, it's actually divided families, and it's causing conflicts within families. Financial stress is one of the biggest negatives as far as relationships and marriages. You see the divorce rate skyrocketing, and a lot of it's because of financial. But let's take a look at this article right here regarding a certain type of debt that we talk about here quite a lot. I've lost my son because of this. I co-signed student loans for my son, but he dropped out of school, and now I'm struggling with $50,000 in debt. What should I do? So he's lost his son, and from what I gather from this article, they're not talking anymore because of the stress and the tension and the blame with the $50,000 in student loan debt. On one hand, you say, this guy should not have co-signed for his son. Maybe that's true, but it's already done. It's happened. I'm sure he wishes he didn't co-sign also. His son dropped out of school, but he still has the $50,000 in student loan debt. All right, and this is just one of, I'm sure, millions of examples of how debt is causing stress on families and family relationships. And even if this kid wouldn't have dropped out of school, would he have gotten a good enough job to pay off the student loans? Maybe not in this economy. Why did he drop out of school? I'm sure there's many reasons behind that, but the fact is that financial stress is causing even greater hardships now with the working class, with the middle class, and it's dividing families. Let's finish it up here with the cost. The price of oil, another big jump, over $87 per barrel. We started to see the decline after it hit about low 87s. But now back into the 87 range, and it's only looking to go higher. So it looks to be not much relief on the horizon as far as gas prices and energy prices. And everywhere you look, it's going to be rising prices. So continue to brace, continue to prepare, continue to look for investment opportunities. We had a big sell-off in a few different assets here. I'm not buying the dip in the stock market. I'm buying the dip in some other digital assets, that's for sure. I'm not going all in. Never go all in. Always have some cash on the side in case prices drop further, in case a better buying opportunity comes down the road. A few weeks from now, a few months, a few years, whatever the case, never go all in is what I don't suggest that because I don't give advice. But what I do is I never go all in. That way you always have some cash on the side. And buying opportunities, better buying opportunities will come up. You're going to see some buying opportunities in some areas, and other areas are going to continue to see rising prices. So continue to prepare. Be well, everybody. Stay well, stay safe. Keep stacking. Bye for now. Peace.